Alright. In this video, I'm going to talk about the QQQ, which is the ETF that tracks the NASDAQ 100. And I'll talk about one specific options trade by an institution that opened a very bearish position on the market on December 29th, 2021. That's what turned us into bears on the market. And we knew that something as big is going to basically happen in 2022. Also, we looked for the strength, meaning where options flow is going in terms of bullish positioning later on, and we found oil, energy, uranium as well. And obviously, a few months after this trade, the red arrow on the top, we saw we started hearing obviously the Russia-Ukraine talks and a bit more of a conversation that kind of made sense why oil and uranium stocks were showing strength. So someone always knows. Now, first of all, I'm not a financial advisor. Nothing I say is financial advice. The only reason I'm here and talking about this stuff is for educational and entertainment purposes only. Always do your own research. All right, let's begin. This is a 2.5 years chart, a bit after COVID crash. As you can see, the strength in the markets and kind of the bull run of 2021. Now I'm going to zoom in because I want you guys to see what happened from the red arrow area, which is the trade that I'm gonna dive into in a few minutes. And on December 29th, which is right here, this is where an institution opened a pretty massive bearish bet on the market. One of the biggest trades that I saw while following flow. I watch options flow. I monitor options tape activity daily. That's how I trade. That's how I invest. That's how I look for opportunities, trying to read the markets and sector rotations. But what I saw here was very unusual, something that I've never seen before. And then obviously we just started the bear market. And now we are in December of 2022. The QQQ is trading at 280. Over here, the red arrow, QQQ was trading at 400. Now let's go into the options trade. This is from Unusual Wells. I'm going to show you this one specific trade. We kind of saw the tech started selling a few months earlier, but it could have been taking profits, kind of selling before the end of the year for taxes purposes. Could be a lot of things, but this trade was crazy. Let me explain. What you guys see here, first of all, in terms of the time feel of the trade, exactly the same time. If you look at the size of the trade, you can see that it's exactly the same size, meaning we have the 110,000 over here. Look at the size. And then we have the 7,427. Combine the 352 puts with the 352 puts, and you combine the 332 puts with 332 puts. It tells us that this is a multi-leg strategy that's basically a put spread, and it's a bearish put spread, and I'll explain why. This is what calls a debit spread. A debit spread is when you sell a put option and you buy a higher strike put option. Again, it's a bearish strategy. It's a debit spread, unlike a credit spread, which is a bullish put strategy. A debit spread is purchasing a put option while at the same time selling another put option at the same expiration date but at a lower price strike. So that's what happened here. They bought the 352, and I tracked this trade the day, 2 days, a few days later. I can make a video about it if you guys want later on, how I monitor and keep following flow to validate my thesis. But that's what they did. They bought the 352s and they sold the 332s. This is a very wide spread. What does it mean wide? It means there's 20 bucks, 20 points between those two legs. That's a lot. And both of these legs are over the money. What does it mean? It means that the stock was traded at 400, right? Over here, the red arrow. When it was traded at 400, they opened a debit spread, a bearish put debit spread. Both legs are over the money. The most amount of money that this trader could have made, meaning the most profitable way for them, is if the QQQ will be below 332 at expiration date. This trade is for June 17th, 2022, meaning in December 29th, they opened this trade for June OpEx, June monthly OpEx. OpEx is it's options expiration. So they had around 6 months, something like that, which is not a lot at all for this size of a trade, because we're talking about over $200 million worth of a trade. Again, that's over 200 million premium worth only for an options trade, a put spread. It might have probably been also a hedge for an underlying stock position, but that's, again, don't worry about it. And again, they sold the 332, bought the 352s, meaning a huge bearish bet on the market when it was 400. If it's below 332 in June 17th, they're gonna make a ton of money. Now let's see what happened. This is June 17th, right? So this is June 17th, right here. Let's do a vertical line, and let's do it on June 17th. Take a look here. You see this? Over here, they bet that the QQQ will be below 332. Not only that it went ahead and basically ended below 332, it basically closed here below 300. QQQ in June OpEx, June monthly OpEx, closed a bit above 270. From 400 to 270. What does it mean? It means that this trader knew that in a span of less than 6 months, QQQ is going to go down around 32%. That's a ton for an ETF like QQQ that tracks the NASDAQ 100. This is what they wanted. And right after June, right now we're in December of 2022. Meaning 6 months later, what they did, big money, and I tweeted about it. Everyone who follows me on Twitter, this is Orlando, this is my @ you guys know how much I've talked about the fact that what big money has been doing with tech and QQQ is buying straddles. I can talk about a straddle again in a different video. Basically, it's a strategy where they're just going long volatility on both sides, meaning they're buying calls and puts, same strike. And look at what the QQQ has been doing ever since. Up, down. They're making money either way. The options positioning, the options flow that we monitor, we follow this so we can read markets, know what market makers and options dealers are want to do with their underlying stock positions. Basically, what are they betting on the markets to do? In this way, we can trade and invest and see where money is going. So like we said, follow the flow. If you like this video, hit a like. Let me know in the comments if you have any questions. I'll try to reply to everyone. And I appreciate the time, and I appreciate you for listening. This is the way.